Hey, good morning, good evening, good afternoon, wherever you're listening to in the world. This is Jake Claver with the Future of Fortunes podcast and my partner in crime, Byron Wolf. How are you, brother?
Good, brother. I'm good, man. It's been a good week. Ready to get into some basics of DeFi. Good
Yes,
stuff.
sir. Yeah, so Byron and I were talking before and we were trying to figure out what exactly we were going to discuss today. And with Flare Network launching early next week on Monday at midnight, Union Pacific time, I thought it might be a good idea to go over decentralized finance and what that is in general for people, how that's going to change banking and what it looks like. And then we'll probably get into some of the pitfalls that have happened um, over the past couple of years where people have lost a lot of money because of the Ponzi schemes that are possible with this technology. So um, to kick it off, uh, DeFi is decentralized finance. What does that even mean? Basically, centralized finance would be what you would normally do with a bank. Okay, so they decide whether you get loans, they custody your assets, they source liquidity from themselves. They don't have to go outside of themselves. Whereas DeFi does the opposite of all those things. So you're able to operate. It's kind of like a broker is for loans. Okay, so they're able to source liquidity and loans from multiple avenues to loan against assets that you stake on their platform that are held in a smart contract instead of by a trusted third party. So
Yeah.
that's probably over the head for some people. I'll try to give you an analogy. So we've been over smart contracts a few times on here, but the simplest function for a smart contract is that it's a ledger and it can hold assets on it in an escrow. So people that have purchased a home, you've probably put money in escrow and you had to put those funds up, you know, in earnest money, whatever it was, to make sure that you were going to go through with the transaction. Same thing would be true of this, but there's not a third party that's trusted by the two parties participating that is able to lean one way or the other, like happens in some instances nowadays. It's just
Yeah.
purely code that would hold the asset. So there's no cheating. There's whatever the code says is what's going to happen based on the contract. And so basically it's trustless. You don't have to trust the other person you're dealing with. You just both trust that the code is the way that it's going to happen.
Yeah.
So,
Because it's rules. So
right.
instead of being a human making a decision, which humans can be swayed, they have preconceived notions, whatever the situation is, humans are flawed, right? We all know that. So with the DeFi, it's a set of rules. So if this, then this, if this, then this. So these rules are what govern it. And the other huge benefit to me is we've eliminated the banking hours, right? So instead of it being a 9 to 5, which I mean that's probably pushing it. I think most banks are like 10 to 1 or something now. But
Holidays,
yeah,
weekends,
yeah,
you know.
24/7, man. It's just going to get done. It doesn't have that human aspect to it, so it can be 24/7, right? And the rules are what governs it. It's way more visibility, because it exists on the blockchain. Anybody can test it, they can see it. It's a better system of the transactions, and it eliminates a lot of the bias that goes in, with the banking protocols, in my opinion.
Yeah. And it can't be manipulated. So, like, you might have a banker that you have a relationship with, and that's great. Right. But at the same time, if you don't have that relationship with a banker, it can make it very difficult for you to have access to loans and funds.
Yeah.
If you haven't done deals before with a bank, they're very unlikely to loan money to you until you've done a deal with them or co-sign with somebody else that has. It's all
Yeah.
built on relationships right now instead of rules and facts. So there's an algorithm that's part of the DeFi protocol that you would put information into. And then based on that information, it would spit out an interest rate and the amount that it's willing to loan to you. And people already use some of this, but then they still have personal bias that plays into whether they're going to loan to you or not. So sometimes you can still get approved or sometimes you still get denied based on what you look like when you walk into the bank, not
Yeah.
necessarily your financials Again, it's more predicated on relationships. So
Yeah, 100%.
DeFi basically just allows you to do all the same functions that would exist with the traditional banking system through a decentralized platform or code. So you got loans. There will be insurance that's through a DeFi protocol where
Yeah.
they pool funds together and then pay out claims based on, you know, whatever smart contracts and all that piece. So it will impact the insurance industry significantly, as well as, you know, financial institutions and how they operate, because now you're going to have another option outside of a bank for a loan.
Yeah.
Um, with Flare Networks, which goes live next Monday, I speculate. We'll see if I'm right or not. So by the time this comes out, it'll probably be already launched and we'll know. But
Yeah.
I think the majority of the banks held XRP on the snapshot date for that network
Mhm.
and will be distributed the token to participate in the DeFi protocol that Flare puts out on their network. So they have Flare Mutual, they have some mining, they have Flare Earn, they have 6 different types of ways that you can leverage the Flare token in their protocol, and it allows the integration of all the APIs that exist in the banking industry. So I'm a little biased. I will get to participate in that airdrop, which is cool. But yeah, I think that that's going to change the game for banks and their ability to compete against the DeFi protocols that exist now for like Ethereum's network, which
Yeah.
we can get into that. Aave and Compound are 2 of the DeFi protocols that the majority of people use currently.
Yeah.
Uh, have you had any experience with those?
Yeah, yeah, I have. I've you know dealt with a few of those and seen some of the transactional you know dynamics between those, and really everybody has their little piece for those, but it all basically works the same. With the kind of talking about some of the uses of the DeFi, like you talking about like loans and things of that nature. So I want to talk a little bit about the bias there. Like when you go to a bank and you say, "Hey, I've got a 100 Ethereum tokens. I want to use those to for collateral towards a car." Well, I mean, you're dealing with a human, so he may say, "I don't know what the hell you're talking about. Is this one of those shit coins that my grandkids have been talking about or whatever, right?" Like they don't know the value of it. So but with the DeFi, like you can use all those crypto coins. Like there will be I mean, they're already in talks now for a basis of like NFTs. Like, and I get that that's more complicated because NFTs don't technically have a value, but there will be things that will come into play, and it's all rule based. So it will take out some of those biases and allow us to really move into what the future of banking looks like. The future of fortunes. A little shout out to our podcast name, but
Mm-hmm.
these things are going to work differently. And it won't be so much of the bias. I talked to one of my clients, had to liquidate a position to be able to get a loan because he was not able to get the financing that he needed with the crypto, right?
Right.
Which sucks. I mean, the only advantage is we were able to take advantage of the wash rule, and so he got to lower his basis, take the cash out, but you got to pay taxes on that, and then he's going to put that into something else. So it's double, if not triple taxation. So there's a little bit of a benefit for him. Crypto winter, prices are all down. He's definitely going to get back into it. But it was honestly, if the correct platform exists in the DeFi network, that would have never been an issue.
Right.
You would transfer over that crypto. Because that DeFi also allows that the trading of cryptocurrencies, the transfer of these within the system. And so if it existed the way that we hope Flare works out, again, understand the bias. I agree, same way. Then that eliminates those issues, and it creates its own liquidity, so to speak, in the sense of it's held. And if you don't know if our listeners don't know what staking is is another big part of that. Staking is essentially you put your crypto coin in for their use, so your holdings are held for their use, and they're going to pay you a little bit back on what you have in the system.
It's like
So
a savings account at a bank,
exactly,
right?
yeah,
So
yeah,
you provide liquidity for the bank with the savings account. They take that money and go earn some money with it, and then pay you a residual, a smaller piece of what they made off of your money,
yes,
right?
yeah, no, that's great. Yeah, great example. So think of staking exactly like that. You put some money into a savings account or an interest-bearing account at your bank. This is just taking that same cryptocurrency and putting it on deposit for them to use. They pay you a little piece back. So this creates that liquidity in the system that allows for loans, allows for new financial instruments, new investments that exist within it. People can come to the DeFi network and put in what it is that they're wanting to do. Essentially the community, and this is really more on the DAO side, but people can make a decision of if they want to support that or not support that. And so we create this whole nother world that's 24/7 and has rules, has basis, and it doesn't have the bias of our human errors, which messes up the system. So, it has a ton more capabilities, right? So we are scraping the surface of what the DeFi network can do, and like you mentioned, Ethereum, Avalanche, ABBA. There's a ton of them out there that are getting into the system, and they're becoming that. Like if you have any wallets, MetaMask, Phantom, all these, they're working within that system to create these, basically
When
24/7 integrating systems. So.
when the banks are able to participate in this system, so right, like you mentioned before, if you walk into a bank and you tell them you have Ethereum and you want to take a loan against it, they're going to laugh you out of the bank.
Yeah.
They're like, we don't deal with that. You're going to have to go use some DeFi protocol or CeFi protocol. So a centralized exchange will do some of the things that we just discussed for crypto. Nexo is one that I've used in the past. If you put, collateralized loan on their platform with your Bitcoin, they'll loan you up to 60% of it.
Yeah.
If the price, this is the downside to this, right? So say somebody did that at $69,000 of Bitcoin, okay, and they took a big loan against it and they doubled down and bought more Bitcoin or did whatever they did with the money. When the value of that crypto drops below 60% or whatever you were given on the loan, they will liquidate your position and take that from you.
Yeah.
So that's the downside to this stuff because it is so volatile. But we always talk about taking collateralized loans on here and how the tax advantages of that, right? So that individual that you spoke about, if he could have taken loans against that crypto, even in a devalued state, the money that he took against it would be tax-free. But instead, he had to liquidate funds, which would be taxed, and then, purchase whatever else he wanted to with it, which he's going to get taxed again on the purchase of it. So he at least got taxed twice. It could probably be even a third time. So if it's inside of a corporation, then he's going to get the corporate tax that goes along with those profits and then the purchase, right? So it would have saved him a lot of time and money if there was something at a bank, which I'm hopeful will be soon. Like I said, with Flare Networks launching, I think the banks, that's their key to get into the game when it comes to DeFi protocols and your ability to stake and earn with them, along with taking collateralized loans against your cryptocurrencies with a traditional financial institution.
Yeah, I agree, and I think this is a great. We've got the ruling is supposed to come out on Ripple in March or April. I think is the latest prediction. Which will eliminate the holding of a bunch of different currencies and allow people to exchange with that. So I think Flare is a great add-in to that, right? Like as this becomes kind of that that avenue for that, and then if Ripple clears our lawsuit, it gets accepted by the banks, and now we have that one current not this is not one world currency, but it's a one currency that's just exchangeable and works for everybody. So we don't have these massive reserves of a bunch of different currencies at every bank, internationally. The DeFi protocol is the basis. So when you're looking at building blocks, it's the basis for that. Like the DeFi allows for those transfers. It allows for the checking of the transactions. There's no double. You can't take whatever your value is, whatever your cryptocurrency, even if you had Ripple, you can't like loan it to two different people or three different people at the same time, and get it out. Like, there's nothing for that. I know that was a big kind of scam done. I mean, I think it's still done right now because there's the human element, but there are
Well, if
people
you
that will
had,
go get loans against the same asset,
well, so I was going to say, you could take your house and refinance it with multiple
Yeah.
multiple banks, and they have no idea because it's not on the same network. They can't see the other liens that are pending against your house if you do it in a certain period of time.
Yeah.
So
Yeah.
the latency in the network and the siloed institutions that exist that aren't interoperable causes a lot of inefficiencies and problems with the current system.
Oh yeah.
And the
Big time.
integration of these technologies it'll prevent all the fraud. It'll prevent a lot of the fraud that goes on.
Yeah.
And we've had a lot of fraud take place in the industry, right? With these Ponzi
Mhm.
schemes that have been built on DeFi. I participated in one that I'll go ahead and disclose on here. So there was Tron Case IO. This was maybe a little over, well, it's probably April of 21, maybe a little after that, May of 21. Um, and they had ridiculous interest rates. You earned like
Yeah.
2% a day on your money that you put into the pool, right?
Yeah.
And so that can be very lucrative, especially if you're leaving it in there and you're compounding your returns.
Yeah.
Um, and so they'll incentivize people to do that, and then there's a big rug pull where they just shut the site down and run off with your money, which is what happened to me. I was fortunate to get some of my money back out of it, but I did not get all of it. And so I
That's good.
know a lot of people that have fallen prey to these where they get in, it's making money, and Ponzi schemes do make money
Oh yeah.
until they don't.
Yeah. Until they don't.
So another one of these would be Luna and the UST
Yeah.
problem that we had, right? They were paying
Yep.
out 20% interest on their stable coin that was an algorithmic stable coin.
Yeah.
And when it became depegged, there was an arbitrage between the stable coin and the asset. And so people just continually kept looping through, swapping this for that, making the
Yep.
spread,
Yep.
and drove it down to almost zero.
Yeah.
Um,
Oh yeah.
and the people that were stuck that had collateralized loans against things. One of the conferences I went to last year, people were touting the idea of using Aave or Compound to stake your Ethereum, take collateralized loans against it at a low interest rate, and then taking the funds from that and putting it into UST to earn 20%, which sounds fantastic, right? And this is an arbitrage that we'd love to see if it exists and it's viable. If you could take a loan at 2, 3, 4% and take that money somewhere else and earn 15 or 20% on it, there's a significant gain there, right? And you can
Yeah.
use the income off of whatever interest bearing asset or investment that you've made over here to pay back this loan over time, and you're getting that 10 to 15% yield that you can take and do whatever else with, have income for
Yeah.
yourself. So it's a great arbitrage as long as it's viable, but unfortunately, um, I become very suspicious of anything that earns more than 8 to 10%,
Yeah. Me too.
especially with the Fed rate, even where it is right now.
Mhm.
Banks or mortgages are back up to 7%. They were down to almost 2 and 3% at one point.
Yeah.
So maybe 10% is a little more realistic now than it was before. But I still become very cautious if I see anything that's touted as producing more than a 10% APY. What about
Yeah.
you, Byron?
Yeah, 100%. I mean, you are seeing those start to increase. I think banks right now are paying about like 2%, on your money, which is a good indicator that that's moving up. And they did call this morning for an increase in the rates again. Hasn't happened, but it's being talked about. And so the 10% is probably fairly realistic for what you can get right now. And I think that if you're in that range, you're in the teens. I don't stress that much. But when I see and a lot of times they'll try to keep those numbers down, but you have to look at like what the annual is, and so you'll see these like 20% return on your money in 2 weeks. Well, that's a massive annual rate, that's
Yeah.
insane. So you have to look at like what the actual rate of return is on that. And when it just seems insanely too good to be true, it's probably insanely too good to be true, And a few people might get away with it. I'm like Jake, I fell for some of the stupid stuff. Like I was trying to pull up some history on it. Multimatic. I don't know if you remember that one, but Alpha for the Multimatic. There's a couple other ones that existed, and they were, hey, we're going to pool all this money, then we're going to loan this money out, right, for even higher rates, and then everybody's going to pay this in, and then we're going to share all these profits, right? Straight Ponzi scheme. And so, people throw their money in, they see the returns, but it's very short periods of time. A lot of these were like, if you got in like as soon as it got issued and you got out like at the end of the hold period, like the 7 day, like within 10 minutes of getting out, you can make money. But I saw some that literally, if you weren't within the first minute or 2 minutes of it opening, and if you didn't get out like within the first minute or two of when the period changed over, you lost your money.
Yeah,
And
well,
so
the people that are running it are the people that are getting in that early and getting out that quick, right?
Yeah.
So
yeah,
that's most of the time you get rug pulls, which is where, and they can see how much money is continuing to come into the pool. And that's what I don't think a lot of people understand, right? If you get in early, you can make a lot of money on these deals as long as you get out before the people that are running it do.
yeah,
And they can see when the money's starting to drop off, there's a big jump in people that are getting in because there's interest and there's a lot of money to be made, and people, will speculate on something like that. But as soon as it starts to taper off at the top where not as many people are jumping in the pool, that's when they rug pull everybody because they know it's about to turn over. And when it does, they're going to get rug pulled. So I will be excited when there's regulation in the space that makes it very difficult for people to do these things. It's hard to know who to trust in an environment without regulatory clarity here in the U.S. So, and even abroad. I mean, so Terra Luna, Dao Quan was on the run in like Korea or some other country, right? Just until there's strict rules globally for all this stuff, it's going to be difficult to police the code, because that's what it is. It's rules, like you said, and as long as you make the rules in the favor of the creators and not, the people using the protocol, you're going to have issues.
Yeah, I'm glad you brought that up. And one of the things that concerns me about it is as we move towards this DeFi, we're going to have more DEX, decentralized exchanges, and so those are going to be truly, direct. Like you want to do a transaction, you do it with this person, right? But the problem with that is somebody's always going to be there to create these, these platforms. So, unless it's a true, in the sense of how it was originally developed, DEX, it's not going to work that way. There's going to be somebody that creates the rules, that has the exchange, and there's going to be something in play that's going to mess it up. So, and again, it's information, right? And regulation, I'm not a huge fan of like overreaching a regulation, but there needs to be some, if you don't understand the concept or how it's built or what the underlying rules are, then it can be very complicated to get in. And, like Jake and I do a lot of research, and so, we're big on white papers and like, investing in what and all this other stuff. So I'd highly encourage everybody to do that. But there are a ton of people, I would say a majority of the population, that invest and transact with just this ingrained, assumption of honesty. And that's not a good spot to be in.
If they see some influencer like FTX as an example, they had sponsors and paid for advertising on all these large crypto YouTube channels and influencers and even Super Bowl ads and other things, right? And so if people just assume that if you're able to fund that type of stuff that you're legit, and that's not the case in this industry. I hope that moving forward it will be. I think once regulation comes in, then this won't be an issue. But up to this point, it's gotten a lot of people in trouble just flying by the seat of their pants and not doing the research and taking somebody's word for something. If your next door neighbor is making money, it does not mean that you're going to make money too.
Yes. Yeah. Just because your mailman tells you that the next major crypto is poop coin or just like, I mean, and some of these names that come out with some of this stuff, I'm just like, guys, I mean, it's literally called rug. Like, what did you think was going to happen? They call themselves shitcoin. Like, what was your base? Like, what do you think was going to be like?
People want to gamble. And
No, yeah.
that's the deal, right? And if that's what you're doing with this, then that's fine. The casinos exist for a reason.
I do.
You can gamble on stocks, you can gamble on crypto, but people that are here to invest would prefer that things were legal and done correctly, and there was some type of advisory community or board that was, you know, looking into things like the SEC should have been doing with a lot of these projects.
Yeah. Yeah, but they're not. Yeah.
No. Well,
And
I think I'm probably overstepping here and may cut this out of the video, but there's a lot of politics that go around and lobbying, right? And if you pad the right pockets, then you're able to play a game that some other people aren't. And so
yeah.
I think some of that may get exposed in the short term. I mean, Sam Bankman-Fried was Biden's second largest donor, or FTX was his second largest donor. So
Yeah.
we'll see what ends up coming out from that.
Yeah. Yeah, that's not getting paid back.
No.
Somebody asked me that. I don't know. It's been a while. I said, oh, yeah, well, people get paid back from that, right? Like, I mean, that's gonna no.
Well, they tried to claw back the investments in that. Yeah, that's not going to happen.
No.
Yeah,
we'll see. And honestly, I wouldn't amaze me at all to see something really horrible happen to this guy, or nothing really at all because the regulation doesn't exist. I mean, I think it'll be the example, that they can build off of. But then again, I mean, no regulation would, like, I think the lack of money to over lawyer, will play a lot into this. But if the claims are correct, down to your last 100 million or 100,000, but if the millions exist that are rumored to be in
the Bohemian government, or not the Bohemian
wherever
government,
he buried it, then
yeah, the Bermudas, they have like 3.5 billion is what they've got, and they're not giving it back.
Oh, yeah.
Right. He bought like $400 million worth of real estate down there.
Yep. You gotta stay above board. You're gonna make those big purchases.
Yeah, definitely agree.
Yeah,
but
I'll get you.
I think that's about all the time we have on this one. I hope you guys got some insight about DeFi. If you do have any questions, feel free to reach out to us. We would love some interaction with anybody that's listening to this podcast. You can find us on social media, and I'll try to list those either on YouTube or through Spotify or Apple, however you're consuming this podcast, so that we can participate more with the viewership that we do have.
I'd love to go deeper. If somebody has questions about a specific area of DeFi, or like how it relates to something they're doing, let us know. Like, happy to get into that, talk about stuff, go a little deeper. I know we went super surface here, but yeah, if you want to get deeper into it, or you got some specific question or concern, or relates to you in a certain matter, you want an opinion, like, let's get into it.
I'd love it.
Happy to do it.
Appreciate you guys. That's all the time we have for this one, and we'll see y'all on the next one.